Are you feeling overwhelmed by the mortgage process? Unsure whether to trust a mortgage agent or stick with your bank? Don't worry, you're not alone. In today's episode of the Money Mindset Mastery podcast, we're cutting through the confusion with Josh Brooks, a mortgage expert from TVH Mortgages. Whether you're buying your first home or refinancing, this is your ultimate guide to saving money, avoiding pitfalls, and making the right mortgage choice for you. Let's dive in and decode the mortgage maze together.
Wake up, it's time to rise. Talking money with sharp insight. Jim and Ryan here to guide. Mastering the money ride. Saving stacks and planning dreams. Living large by honest means. Tune in now for the schemes. Breaking down financial themes. Money mindset every day.
Well, I'd like to welcome everyone to the Money Mindset Mastery podcast. I'm your host, Jim. Joining me today, as always, is my co-host, Ryan. Ryan, how are things?
Always excited to do these podcasts every week now that we've gone kind of a weekly schedule, which is amazing. And I think this topic comes up a lot with clients, and that's why I'm excited. And it's a very big decision a lot of home buyers tend to face. And obviously, we've invited Josh Brooks from TVH Mortgages to join us today and have that conversation. So, yeah.
Yeah, and so officially, Josh, I'd like to welcome you back. How are you doing today?
Not too bad. I'm a bit under the weather, but I'm glad to sit down and have a discussion with you guys because I think this is important. I'm happy to be here. Thank you so much for having me on.
Well, we appreciate it. Today we're going to talk about, here's the title, Navigating the Mortgage Maze. And should you choose an agent or a bank? And we're going to get insights from Josh, who, again, you are with TVH Mortgages. Now, we're going to do our very best to not be biased. But of course, full disclosure, part of the TVH group, we have Verico TVH Mortgages, which consists of my business partner, John Zoerby, who is the mortgage broker at Verico TVH Mortgages. And obviously we have Josh and Carter, who are agents from Verico TVH Mortgages. So they're going to provide their perspective into why you should be working with an independent agent or broker as opposed to the bank and a banker. What I will say is I am a former banker. I was a mortgage agent at the bank. So I do have some experience here. But what I will say this in all fairness to the bankers out there, if you hear something that you don't agree with or you would like to provide your own input or opinion, we invite you to go in our comment section and put your comments there. Now, don't be vulgar. Don't be mean about it. Don't be rude about it. We're just looking for if you have an opinion that's different from ours, maybe we're missing something, please just go in the comment section and type in your opinion there. Think that's fair, guys?
Yeah, that's perfectly fair.
Awesome.
It's live, so feel free to call in too.
Yeah, sure. You're right about that. Okay, so let's talk about the case for mortgage agents. So first of all, Josh, can you really explain what a mortgage agent does and how it differs from working directly with a bank?
Yeah, certainly. So I think the best way that I love to explain this to clients and people we work with is think of a mortgage agent as like your own personal grocery store shopper is the kind of scenario I love to use, because when you go to a bank, for example, the person at the bank, their job, all power to them, is to kind of offer you what is available at their bank where they work. Now, the difference in agents and brokers is that, it's like you're looking down a street and you're like, I need apples. Well, Walmart has apples and No Frills has apples and Loblaws has apples. And we're just there kind of comparing the price. Maybe perhaps you go to Walmart and those apples are bad. So we go over to Loblaws. Oh, those apples are great, but they're too expensive. We go over to No Frills. Those apples are cheaper, but maybe a bit lower quality. So when it comes to financing, it's definitely differs from person to person, case to case, situation to situation. So I would say that would be the main difference, is that us as agents and brokers, we are particularly looking for products for financing that fits your situation across a multitude of different, lenders, as opposed to if you go to a bank, their hands are kind of tied to offer you what they offer at their institution.
I'm glad you compared apples to apples in that scenario. That was awesome.
Yeah.
What I will say to the differences, and once upon a time, so when I started in banking 35 years ago now,
Wow.
banking was very, I know, I look good for my age. Um, Banking was very different back then, right? There was definitely a sense of when you walked into the branch, you were dealing with the branch manager or your mortgage agent, and there was definitely a personal connection. And the branch had a lot more flexibility in approving the mortgages and the loans. And then I would say in the mid 90s, they started to centralize the process. So it was no longer the branch manager had the authorization or the mortgage agent at the bank had the authorization. It was all centralized. So someone in a location outside of the branch made a decision not based on the relationship, just based on the data, based on the application. So the reason why I say that is I think there still is that false sense of security right now with people where they feel, well, if they go to the bank, they know you. So you might have a better
Yeah.
shot at getting approved. And that's really no longer the case. It really hasn't been the case for over 20 years. But in dealing with an agent, a little bit different, right? Because you're not just looking at the transaction of the mortgage. Now, don't get me
Exactly.
wrong, there are a lot of agents that do. But I would say a lot of good agents are not just strictly looking at the transaction. They're looking at getting to know the individuals, what their financial goals are over the next 3 to 5 years. I know in working with John in the past, we would sit down with clients and that would be a question for them, especially with a young family. Do you plan on having children in the next couple of years? Are you planning on changing jobs? Are you planning on upgrading? Those things are really important to know because we need to find the right mortgage solution that will adapt to some of those changes over the next 5 years. Where my experience at the bank, they don't really do that. For them, it's more of a, hey, here's our best 5 year fixed, and maybe you should consider a variable because it's a better rate. Like that's really has been my experience. Would you say from what you hear from clients who have gone to the bank and maybe reverted back to you guys that that's typically what they hear as well?
Yeah, 1,000%. I can't even count at this point how many times I've heard exactly what you're saying of like, oh, I went to the bank and they gave me this rate and said this term. And something that I appreciate you brought up, Jim, is the like, what are your financial goals? Because there are certain things that I won't get into too much detail, but there are certain things that the bank leaves out when they're kind of qualifying people at the branch level. One example I will use is say you have someone purchasing, which this has also happened before. You have someone purchasing, they go into the bank, they say, hey, I'm looking to purchase a place for $500,000, get a mortgage of, let's say 300,000. Am I approved for that? And they say, you know what? Great, you're approved. All these things line up. But the one thing missing from that equation that is kind of typical across the board is the property itself. Because you have to take into things like property taxes, land transfer taxes, depending on where you live, right? So there are other things that go into it that, all due respect to the banks and whatnot, that at the branch level, they're not going to include in their calculations, which has ended some people in a bit of trouble I've seen in the past, right?
So why would somebody choose a mortgage agent over a bank then?
Well, again, it's the variety, the diversity, and something that we take a lot of pride in here at TVH is what we do before and after a mortgage closes with us too, right? We have the ability to do things on behalf for the client. Go to the lenders, say, for example, after the fact, they want to do a prepayment, a lump sum payment towards their mortgage. They want to change things. They want to lock into a fixed rate. We can get them in touch with the right people. In some cases, we can actually go to those people themselves and, help them out and get it kind of settled on that end, so they don't really have to worry about it. And again, the example I used earlier with the grocery stores, you could put anything in place of that. It's just the variety, and we always will find things that work for the client, not for us. And that's the difference. It doesn't matter. We're a variable cost to lenders. They will only pay, John, they will only pay us when a mortgage closes with them. So we don't take clients' money. We frankly don't need it. We appreciate the business, but we don't get paid by clients. So those would be like a few things, and I could talk forever about the advantages we have, but I know we only have so much time on this, right? So,
Well, that's a good point, because I have a lot of friends of mine who were former agents, direct providers for some of the banks on the mortgage side specifically, and they left those jobs to become mortgage agents. One of the reasons why, and this isn't always the case, but my experience is it's the majority of the time it is the case, that agent was able to provide the same bank product, mortgage product, at a better rate than they were able to as an agent of the bank. And the reason for it is because, again, the bank has the cost of maintaining the building, the office, the pension, having the employee, HR, all those things. When they're dealing with an agent, they don't have any of those costs, right? Those costs are basically the agent's responsibility. So as a result of that, because their costs are lower in placing that mortgage business through an external agent as opposed to an employee of the bank, they were able to discount some of those rates as a result of that. So people were able to experience a better rate. Now, that's not always the case. There have been some situations where the bank is trying to be competitive and gain market share, and they will do a discount. It does happen from time to time. But I would say my experience has been based on these conversations that the majority of the time, the agent was able to offer that bank product at a better rate than the actual agent from the bank directly. Would you say that that's consistent, true, not true? Any experience in regards to that?
you know what? Recently, myself personally, I've kind of gone through a situation like that with clients where, they decided to go to the branch to try and see if they could get a better rate. And the lender immediately reached out to us. So they kind of even encourage that at a lot of lenders that, hey, we want to get this done on the broker level, not at the branch, because of some of the reasons you just listed there too, right? Like, again, they got to pay the salary of that person. We don't have a salary for them to pay. We're not on their payroll. We're not, so, and also on top of that, it's just, I feel like it's just more uniform and easier when everything is done with us, because again, a lot of the things that the client would have to do themselves if they go to the branch, we do it. We take care of the documentation, and that's something that we get a lot of good feedback on from clients as well, is when it comes to that process where, we're prepping the down payment, we're getting all the bank statements, all the documentation that we need to close the financing. Clients say, hey, wow, you know what? I'm so glad that you guys were there to vet it and then send it into them, as opposed they go to the bank. Maybe they don't know how to get a property tax bill. Maybe they don't know how to get all these things. We're here to help them with that. We're here to show them the right direction and also hold their hand as we're walking down the path with them too, right?
And I think to add to that too, if they are an existing client of TVH Financials, for example, or TVH Accounting, with their approval and authorization, if we already have a lot of the financial data for the underwriting requirements, then we will provide that on behalf of the client, as opposed to the client trying to pull all this information while they're busy working, dealing with family, and whatever else. We can do that on their behalf, and we've done that many times before.
Yeah, exactly.
Absolutely. And what I've noticed too is, like, your team is a real advocate for the clients. right? And making sure that we're finding the right information. And as you said, you're comparing apples to apples. Like, you don't work for a bank directly or a lender directly. So really, you work for the clients first and foremost, right? And you have the ability to then go to any bank or any lending provider that is on there. I think that's one of the big things that I think first-time home buyers especially don't really understand, is that they're thinking, well, where's this money coming from? Well, I'm dealing with the bank directly on your behalf. And on the back end, as you guys just said, we're providing a lot of the times, especially on the TVH financial side, many times with the client's approval, we're able to share the information that you need, so they're not digging through endless amounts of records trying to pull where the money's coming from, to give them where their financial status is and where the deposit's going to come from. So I love that on a few occasions when talking with you guys, especially on a Friday, you're collecting information Friday at, I'm going to guess 3:30. 3:30. Certain institutions won't be so quick to get back to you, but on a Friday at 4 or 5, when we're trying to close something for clients, you guys are still there collecting data and making sure that we're putting in the proper information. And again, that shows that we're going to bat for clients versus somebody on payroll that is shutting down and being like, thanks, have a great long weekend. So anyway, that's been my experience with the clients that we share and that we use TVH Mortgages with. And I don't know if there's anything else that you have to share. And I know the next portion is us talking about the bank's perspective, trying to give some balance to the force. What kind of advantages would somebody have going to a bank, or what does the bank have to offer that you guys don't?
Well, I would say, and I do want to touch on something after this question that you said, so I've made a mental note of that, Ryan. I would say the advantages of the bank, and it's hard to think, not because I'm a bit biased, but well, maybe because I'm a bit biased, but it's hard to think because there are very few, in my opinion. But I would say the biggest advantage of just going to a bank would probably be just the seamlessness of if you bank at TD, for example, and you want to just get a mortgage with TD, fair enough, right? Like, you have all your stuff there. Lenders are always putting in little promotional stuff to kind of, like, urge people to be like, hey, like, you already have this bank account with us, you already have this credit card, keep it here. And I guess it is nice to have all your stuff, all your finances kind of all in the same place, like all your eggs in one basket. Well, on the flip side of that, I don't know if you should always have all your eggs in just one basket, you know what I mean? So I would say that would probably be the most prevalent advantage of just going straight to the bank. Is that, and Jim mentioned earlier about sometimes they're pretty competitive with their rates too at that level as well. So those would probably be the things that I would say. But something you said that was interesting, Ryan, was about about like the timing and stuff like that too, right? That's something that is very underrated, I think, when it comes to doing mortgages, is the timing. Sometimes we will get people who are like, hey, I have a purchase, it's closing in 2 weeks, can you get this done? Now, to your point, do you really want to be working around the 9 to 5 bank schedule, and they don't open on the weekends, and that's the, or you call us, we're picking up. It doesn't matter if it's a weekend, it doesn't matter if you send us an email and say, hey, we're looking to put in an offer on a place on Sunday and it's Friday, we're getting you something by Friday night or Saturday morning so that you can be ready to do that. And I think that's something that is very underappreciated, just a life in general. But I think when it comes to doing your financing is very, very important, because 9 times out of 10, clients will call us, hey, what's going on? What's going on? And then you tell them oh, this is what's going on, and this, and the other. That's all they want to hear. They just want to know that it's progressing at a reasonable pace and that this is going to get done. Now, imagine that same anxious client calling the bank and having to wait on hold for 30 minutes and listen to the same hold music over and over again. Now they're just kind of sitting there and sitting, just letting it marinate. They're just letting the stress marinate, right? Like something John always drills into us here is exactly that. Like, be on top of things, follow up, keep them in the know so that we don't have that scenario happening, or God forbid they get fed up and they go somewhere else or what have you, right?
And now I want to go back to the all the eggs in the one basket, the benefit
Mm,
of working with a bank. And I'm going to speak as a former banker here. And one of the reasons why I left the bank, because as a banker, our job was to cross sell every possible product that we had to offer. Our bonuses were based on that. Our careers were based on the cross selling. And the reason for that too is there was studies that were done at one of the banks that I worked at that if a client had, I believe it was 3 or 5 products with the bank, there was a 80 or 85% retention of that client. Here's the problem. The problem is the banks are generalists, and there is no way that they have the best product in the country in every situation, meaning not one bank will have the best mortgage product. The same bank will not have the same lending product. They won't have the same investment product, bank product. There's a whole bunch, right? So I know people have made comments to me saying, well, if I work with TVH Group and I do everything within TVH Group, well, am I not also putting all my eggs in the TVH Group basket? Yes and no. The difference is that we're brokers. So with Verico TVH Mortgages, you're brokers on the mortgage side. We are brokers on the investment side. We are on the insurance side. So you're keeping it all within the family, but it's not all within the same company, meaning we will select from different sources that we have available to us the best products in that category. That's the biggest difference. And not even necessarily the best, but it might be the best for you in your situation as well, right? So
exactly.
I just kind of want to share that with people because that is the biggest difference as well. And the reason why I left the bank was because I'd have to make the recommendation, and many times I feel guilty because I knew that if they just went across the street to the competitor, they'd get a better investment product than what I was offering. But as the employee of the bank, I couldn't tell the client, you know what, our product sucks. Go across the street, get theirs. I had to push what we had to offer. And I always felt guilty about that. I don't feel that anymore because I now generally can say, hey, we're offering the best products for the client situation. Ryan, anything you want to add to that?
Uh, you nailed it on the head, which is essentially what it comes down to is like we're able to use everything, right? No matter what bank product or insurance product, mortgage product, we can pick and choose what is best, the best solution for the individual. And as you said, the blanket statement often in certain institutions, banks in particular, really don't have a large selection, and the employees are essentially handcuffed to recommend because they have to meet numbers, right? They have to meet a certain budget, and a certain product comes down the line, and that's the flavor of the month. I've experienced this, dealing with my son's RESPs. I've dealt it with for years at the time with my mutual funds, and I was like, is this all that's being offered? Isn't there something with more risk or less risk or something that fits more my needs? And it was essentially here's your 2 or 3 items that you can choose from. So I always found it hard, even as a consumer at the time, before I was enlightened to the options that are
Yeah.
now presented, and the different solutions that can really help people in the long run.
Yeah, it just reminds me, I had a meeting yesterday with a long-standing client of ours. So her and her husband have been clients of TVH Group since inception, since 2008. So has a mortgage with John, has investments and insurance with me, and retirement planning, has worked with Sonia repeatedly, has worked with David as well as their accountant. And at the end of our meeting yesterday, she says, why I really like working with your team is because, she's been approached by others in the financial industry, but she's like, they're one trick ponies. they can only offer just investments, or they can only offer just insurance. Or she's like, what she likes about TVH Group is that we've put together a team of professionals where we can offer most of their financial requirements. We can handle most of it, right? Not all, but most. And that's the reason why she keeps referring to us or referring her friends and family to us, because she has experienced the benefits of working under this model. So, yeah, I just wanted to kind of put that out there. So, what are some myths and pitfalls of working with a mortgage broker? Like, I'll give you one. Years ago, if you wanted to work with a mortgage broker, it was the old, you had to go downtown somewhere in the back alley. There was a back, little office location with a
Yeah.
door, and you had to kind of have the secret knock or whatever. And, to get it, like it was considered to be a sleazy thing to do if you had to go to a mortgage
Yeah.
broker. That's definitely
Hmm.
changed since. So a
Yeah.
lot has changed over the last 35 years. So what would you say some of the misconceptions are in working with a mortgage broker?
That's a great question. And the first thing that popped into my head when you asked that question is that I think a lot of times people think that we're like rate machines or rate computers that are just like, oh, we've got the best rates, we've got the best rates. And fair enough. But as we spoke about, I do, from doing this for, wow, almost 6 years now, I've learned that the rate is 9 times out of 10 the least important part when it comes to doing the financing. Not that it's not important, just the least important part. Like when I ask questions like, we mentioned earlier, what are your financial goals? That supersedes anything that about the rate, because then people start thinking, oh, maybe I want to renovate my place in a few years. Maybe I'm going to break. Maybe I'm going to buy another property. So if the only thing that you're worried about is the rate, then we're kind of just going to be stuck on that, for forever at this point. And again, recently, this is something that I saw firsthand is clients that I was working with for a while is what I'll say. And their whole thing from start to finish was, we want to know what the best rate is. When are the rates moving? Can you let us know what's the best rate? Well, again, there are other things that go into it than just that. So it's kind of like you feel like you're cutting the client short when it's only the rate that we're talking about, it's only the rate that we're focused on. Because if I say, if I get you the best rate, say for example, the 5-year fixed was like the numbers that they were at COVID, like 2.5%. And then 5 years later, or 2 years later, even let's say 3 years later, because they say over 70% of people in this country, they break, in the third year of their mortgage, right? When they get a 5-year term, and they come back to me and they say, wow, well, this penalty is gigantic. I didn't know that this is going to happen. We did talk about that when you were only focused on the rates, right? And now we're kind of in a bad spot. So people kind of have to, and I know Ryan, you and I have talked about this a lot too. People need to think ahead and think broader when it comes to it. So I'd say that's probably the biggest myth. And another one that also comes to mind is, and this one is like kind of interesting. People always say, okay, so what's the fee going to be like to use you guys? None. There is no fee. We're just here to work on your behalf. Um, we talk to the other guys for that. We punch up, not punch down. I think is a good way to put it. And there is no fee to work with a mortgage agent or broker. You can talk to us. That's more than fine. We won't bill you for your time. We just want to help you get into a good financial situation. That's it.
Now that would be though if they were going into a traditional
Yeah,
or
exactly.
a lending, right? But if they were
Yeah.
going, I don't know, B lending, would there potentially be a fee, or is that the same thing? Just you get compensated by commission, or it could
So
vary from company to company.
yeah, exactly. So it definitely varies from company to company. I would say when you start going into like C tier lending, which is more private stuff, that's where you more often than not start seeing, oh, like there's a brokerage fee. and whatnot that would get paid to us since it's a different way that they're doing it there. But yeah, like typical, like standard A financing and a lot of the Bs as well. That we worry about the payment from the lenders and not the clients.
Yeah. So just to clarify, A lenders would be kind of like your traditional bank lending, right? You have to be at the top end, really good credit, income, whatever else. But on the private side is where potentially there would be a fee. But in that instance, that would be fully disclosed up front. So before the person transacted, so they wouldn't pay a fee just having a conversation with you. But if they were going through the process of going through the underwriting, they would know that at the once this transacts, here's what the fee would be on the private side. Okay.
Yeah,
So just so
exactly.
we can clarify the difference there. I do want to share a personal experience that I had with John when we first started going back to the whole rate thing. I believe it was 2009, 2010. There was a mortgage provider in the industry, and I think it was like a 4-year rate. They were offering like the lowest of the low 4-year rate across the country. And people were going like nuts for this 4-year rate. But embedded in the agreement, to your point, was the penalty, right? So if you had broken the mortgage before that 4-year term, there was a significant penalty, like much higher than your typical mortgage. And I remember John coming across a client who they kept, again, they were rate shoppers. They wanted the best rate available. And John would ask him, like, hey, like, do you think you may need to upgrade your home? Do you think you might need to refinance over the next 4 years? And of course, they're like, no, 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 I want the best rate. John wasn't able to do it. I think they went elsewhere, I believe, or John may have placed the mortgage. Again, I don't recall entirely what happened. But 2 years into the 4 years, what happens? Client comes back. Yeah, I need to sell and upgrade, I think was what they were planning on doing. And I think the penalty was something like $30,000, $40,000. Like it was, if it was elsewhere, it would have been like five, right? Um,
Yeah.
and the client was getting upset with John over it. And John's like, this is why we talked about the best rate may not be the best product for you depending on your circumstances, right? So I just want I really want to drive that point because I know even when I deal with clients, like, well, what kind of rate can John get for me, or what kind of rate can your people get? It's not about the rate; it's about the right solution. Or some lenders are better with self-employed individuals, right, than others. Like there's different underwriting requirements and methods from institution to institution, and that's another thing that people don't recognize is when you're dealing with a broker. Depending on your unique circumstance, they would actually have a better idea of where that business should be placed to give you the best shot at getting approved for a mortgage. So, do you want to maybe talk a little bit about that, like some of the uniquenesses and different variables in underwriting and why a mortgage broker would be or agent would be so much better than working with a bank?
Well, that's I think a perfect example of something we've seen so many times here, on the mortgages end with us. And there are a few things that, especially on the back end, like talking to both the client and the underwriters on our end is interesting to see because the amount of stuff that goes into it, the amount of time that it takes to get it done, the amount of work that we're doing on our end to make sure that they're getting, like you said, the best product for their financial situation. That's a lot of the, sometimes we have clients come back to us, they're like, oh, it's been a few days, what's going on? That's what we're doing in the background. We're trying to make sure that you're getting the best mortgage for your situation because that's what really matters. We've had clients in the past. I remember when I first, maybe like my second year working at TVH, we had a client who came back to us. I think John had done a mortgage for them a couple years before that, and they're like, "Oh, well, you got us into this bad mortgage, and you said this rate, and we wanted that rate." And, the I think one of the benefits of us on our end is that we must keep all records of documentation. So the commitment, the mortgage commitment we would have done with them, we have to keep that for up to 12 years, physical, electronic. Yeah. So we have to keep that for a while. So we can just go back and say, hey, actually, this was the case. And on the positive end, we can go back. If a client comes back and says, you know what, I kind of lost some of the paperwork for this. Could you maybe let me know what's going on? Yeah, we have it. And I don't know what they got going on at the bank, but I doubt, more, all power to them. I doubt that they would have that. I doubt that they would keep every single client's info like we do. And meticulously go over it like we do and kind of keep them in the know and update them on everything. Something else interesting that you said was about how, these penalties that get really high. I think the highest penalty I think I've ever seen working here is $60,000. And it was exactly that situation where they wanted the rate, lowest rate, didn't care about the term. And then maybe a year or two in, they're like, oh, you know what? Something came up. We're going to have to, sell. Okay, well, now you have to sell and worry about a 60 grand penalty on top of that. And for some people, that can sometimes make the financing undoable. They won't want to do it, or, now something I think that people benefit from us is that we will sit down and explain everything. We'll explain the difference between breaking a fixed rate mortgage, breaking a variable rate mortgage. A lot of people don't know that those penalties are calculated differently. Variable rates are typically based on 3 months of interest, right? And fixed rates are typically based off of, the IRD, the interest rate differential, which is a whole other thing that, would keep us here for a while if I got into that. But again, things are done differently that we will take the time to kind of show clients, guide them in the right direction, talk with you guys if they already have stuff with you. Even when it comes to what they can use and can't use for things like down payment and stuff like that, we've ran into those situations before. There are certain accounts that you can have that don't qualify to be used for down payment, right? Because it's not readily available funds that you can liquidate instantly, right? So those are like a few examples, I would say, just that I've seen the most working here and working with people and just seeing their situations. A great example of that, actually, I know I'm rambling a bit, but a great example of that is we just had a couple clients who they were buying a place and they wanted to use crypto for their down payment. I'm going to say this to, I don't know if anyone's young like me and they're getting into that new crypto wave. Maybe don't do that, or maybe think of other places to put your money if you're thinking about getting financing anytime soon, because crypto is one of those things that lenders will always kind of be like,
It's not
we
real
don't
money.
really want to use that. Yeah, pretty much. Yeah,
Not
pretty
real money.
much. It's you know what I mean? So things like things like TFSAs, things like stocks, again, regular savings and checking accounts, like those would be the things that, if you just went into a bank, you might think off of that first meeting, oh, I'm good. I have all this money left behind. But we'll tell you from the beginning of the process, wait a second. Let's look at all of this.
Yeah, but if they convert the crypto into regular currency and they have it saved, like that would be acceptable, right?
Yeah,
So
a certain time beforehand. Yeah.
Yeah, so we're not saying if you put all your money in crypto, and we're not proponents of crypto, we don't encourage it at all. We don't think that's really a long-term investment strategy. However, it is something that we have to live with. It is a method that a lot of people use. So what I would say is having crypto isn't going to prevent you necessarily from purchasing a place if you convert the crypto to regular currency, have it safely placed somewhere as verifiable, then you would be okay in that scenario, right?
Yeah,
Okay.
exactly. So as
Okay.
long as the lenders can track it, that's what they want to see. And
Right.
crypto is difficult to do that, right?
Right. And I think I want to go back and defend the banks on one point that you made. And I can again speak to it as a former banker.
Hmm.
When you talked about keeping the history and the data and whatever else, the banks are actually pretty good at doing that.
Okay.
So they do have the history, they do have the data. Like I know that if I go into the branch that I opened up my bank account at when I was 16 years old, 35 years ago, they would still have my signature card there that I signed
Wow.
at age. Like they are pretty good at keeping the data. What they're not good at is the relationship part. So someone can go back 2 years later wanting to speak with a mortgage agent who placed a mortgage for them with that bank. That person might be gone, and now you're dealing with someone new who has no recollection of the situation, and they are trying to pull the data from somewhere, and they're just reading notes and whatever else. So I think really the difference would be between dealing with the mortgage broker agent and the banker is you would know who that person is, you'd remember them, you would recognize them, and there would be recollection of the situation in addition to, hey, let's pull the data and find, as a reminder, refresher of what the circumstances were at the time, right? You'd be able to do that. So I just want to kind of defend the bank there, where in terms of record keeping, they are very good at record keeping.
That's
Don't have
good.
to,
That's good. That's good.
yeah.
Something. One more thing I will say, because you just mentioned it, and it made me think of this, is the kind of more along that relationship aspect, in the sense of sometimes you go to a bank and you get the most experienced person who's been there for 20 years. They know exactly what they're doing. They have everything in front of them. You never need to worry about what's going on. Or sometimes you get the person who was hired 2 weeks ago, right? So
Who just
that's a
finished their
big
training
thing.
or their
Yeah,
training,
exactly.
and they really don't know what they're doing, right?
Mm,
Not because they're not educated, don't have the knowledge, they don't have the experience, right? It's very different.
exactly.
It's kind of like we used to have a commercial that we ran on social media years ago. This is before your time, Josh, but it was TVH Group, and it basically said if you think hiring a professional is expensive, wait till you hire an amateur, right? The same thing on the mortgage side. If you think, working with someone at the bank with experience is going to get you through the process, wait till you find some, because you don't know if that person just started 2 weeks ago or if they've been
Mm,
there for 20 years, right? You just don't know. So I love that point that you just made. And Ryan, I mean, Ryan, you and I dealt with this, and we've talked about this many times, even on the financial planning side of things. Our last episode, we talked about this actually, about account managers, right? You're dealing with an account manager at the bank, and you build that relationship, that rapport. Now, I recognize on the mortgage side, it's more transactional. It's usually you place it, and maybe 3 to 5 years later, you're back at replacing it again, right? But typically, when you're working with a lot of the individuals at the bank, they're temporary. They're there for 6 months, 8 months, 10 months, a year maybe, and then they move on. They change location, they change branch, whatever else, and now you're dealing with a new person, and you're kind of starting that relationship all over again, and then it repeats itself, right? Rinse and repeat. Where when you're dealing with a boutique firm like ours, I've been around with TVH Group since inception, since 2008. So has John, right? Josh, you've been around for 6 years, as you mentioned. Carter has been around, gosh, I think close to 10 years now,
yeah.
or it's getting close to that, right? Sonia, our partners, they joined John and I in 2010. So they've been around for 14 years. So there's a lot of longevity. You're dealing with the same people. Monique, my assistant, she's been with us since inception, right? It's just you're dealing with people, relationships who remember you, recognize you, understand your circumstances. There are times where we get together at the office and where conversation comes up on a client we're working with, and another team member from another division or partner might say, oh, hey, I wasn't aware of that, and we're going to be speaking to them soon. I'm glad you shared that information because that'll help us in speaking with them as well, right? And before anyone gets all poo poo about, share, disclosure and whatever else, we get all clients to sign a disclosure document basically stating that, hey, we can, when you work with us, we can share your information with the people within TVH Group and referral partners, external referral partners as well. All right. So we do have that disclosure signed by, so Ryan, we're coming to the end of this. Anything you want to ask or add to the conversation?
The other part that could get into a long discussion, but we'll keep it relatively tight, or try to, which is pre-approvals. The mortgage maze of pre-approvals.
That's a good point.
And I would say probably one of the most important steps. I know people are looking for their next home or first home, especially as a first home, and I'll lead this into a very quick story of my own, which is the moment you start working with a real estate agent, you should be working with a mortgage broker right away. And the difference, what I learned the hard way, which was I was very encouraged to go get your pre-approval through the bank. They just do a quick soft scan and they give you numbers. But when you work with a mortgage, and I ended up switching to a mortgage broker when buying my very, very first property too, was that they walked me through everything. It wasn't just about a pre-approval. And Josh, you could probably explain what a pre-approval is in comparison to like actually going through the process, because as a first-time home buyer, I did not understand that. And that was a very big thing that nobody at the bank walked me through, because I walked around basically with a letter saying this is what I was approved for, and I could go shopping with my real estate agent, bless his soul, and find what was best for me. And I walked around with this paper thinking that it was worth something, but really it was monopoly money, essentially. It wasn't worth anything. So, Josh, can you very quickly kind of explain the difference of a pre-approval and actually working with you as a mortgage agent?
And I love that you brought that up, because it's something that I mentioned passively earlier, is when you go into a bank and you want to get a pre-approval, as they call it, it, like you said, it is kind of like a tissue paper in the wind. It's not really something that is concrete on getting you locked in with that financing. The only time that you are locked in with that financing is when the lenders have looked over every aspect of what's going into this: your credit, your income, your character, the collateral, which is the property, right? Those are kind of the main things that you should be thinking about and looking for. And I'll actually kind of challenge that statement you made of when you start working with a realtor, work with an agent or broker first, because we can then help you build a budget so you can go out and start looking for places with your realtor or whomever you choose to do that with, and feel comfortable that you're going to be getting a place that is right for you. And most importantly, that's not going to make you house poor when you buy that place. Because something that we love to do here at TVH Mortgages is put together the numbers for clients. We'll say, hey, send us a couple listings you're interested in, and we'll have a look at it, do our thing, and get you a snapshot. Again, all final numbers will come at closing with the lawyer, but we'll give you a pretty good estimate of what you can be expecting your monthly payments to be, based on the rates at the time and all those things that actually, even though that itself isn't an approval or pre-approval, I would say is more beneficial than a pre-approval, which is like, hey, let's look at your income. You say you make this much. Okay, I'll write that down. You say this is your credit. Okay, I'll write that down. Based on that, this is how much you can afford. But then when they actually come in with the property they went and found and put an offer on, all of a sudden they're like, oh, we didn't know the property taxes were $4,000 a year. We didn't factor that in initially, right? We didn't know that it was in Toronto. You got the double land transfer tax now. We didn't factor that in, right? So that's what I would say is kind of a lot of the main differences, is that pre-approvals don't include the full picture as to opposed to a full approval would.
So I got a double-edged sword on mine, going back to my story, which was I got the pre-approval. The difference between that and what I actually was able to claim was a difference of almost $200,000. So imagine me spending some time, and I actually put an offer on a place thinking the amount that I had been pre-approved for, and nobody at the bank said anything. Thankfully, it was declined because I got outbid at the time. And then the mistake of how different that number was like, too bad for you. And that was what was given to me from the bank manager. And as you said, I later found out that this person had only been working at the job maybe 4 weeks, right? Hadn't used his mentorship to find out if that was the right solution for me at the time. And, later worked with a mortgage and closed a deal in a beautiful place. And so that's my story.
It's amazing how many people, they put more value in the rate and not in the experience of the people that they're dealing with. Right? Like experience is just so much. I mean, going back to things that John's experienced while he's been a mortgage broker, right? Going back to the global market meltdown that we had in 2008, and just a lot of things that we've been kind of dealing with or have dealt with throughout the years. We've been in those storms. We have the experience. We can help people navigate through those storms. When you're dealing with someone new, and no disrespect for people that are new, they're trying to build a career and doing whatever. You were Josh, 6 years ago, you were new, right? But thankfully, you were side by side with someone like John who had experience, and he was able to coach you. And so I think people really need to put a little bit more value in experience and relationships, and less on the rate or the logo behind the mortgage product, right? So we're gonna start to shut things down here, guys. But what I will say is this: is that again, I'm biased, obviously, because of my partnership with John, who I've known since 2006, 2007. We've known each other. What I will say is with John, and this kind of extends out to Josh and Carter, they really do care about the people that they're working with. That is very important to them. They're very empathetic. Many times they will sit there and ask themselves, would I do this if I was in their shoes? Would it make sense? As opposed to just ripping a mortgage after a mortgage after a mortgage. Like I know people like that too in the business. They're high volume mortgage agents and brokers, and all they care about is just closing those deals, right? You guys definitely do take the time to get to know people, their situation, their circumstances. Heck, even today, like I had a quick chat with John. He's like, hey, did you ever speak with so-and-so? Because here's a situation. I really think they can benefit from working with you and your team. I'm like, no, I've never talked to that person. Okay, great. I'm going to connect you guys because I really do think that they can benefit from your help, right? That's what he's not cross-selling, because he doesn't benefit financially from sending them my way,
Exactly,
right?
yeah.
It's just more of, he just believes that they can be better off if they work with our team, right? So I encourage people to really take a look at Verico TVH Mortgages, search out for them. What I would also say is, in terms of our conversation today, I would love to hear your experience out there. So any listeners or viewers, if you've had a positive, negative experience with a mortgage agent or broker, could be one of ours, could be external. If you've had a positive, negative experience with a banker trying to get a mortgage, would love to hear those stories as well. Again, if you have any comments at all, I am going to put a bit of a Q&A at the end of our episode as well this time around. But I encourage your feedback. Again, just be respectful. Be mindful of that. We're not here to trash talk anybody. But I would love to hear your opinion and your experience for sure. So, Josh, if people do have questions, if they're looking at either a new mortgage or refinance, doing whatever that's mortgage related, how can they best get a hold of you guys?
Well, you can always give us a call. Our office number is 416-488-0074. Shoot us an email at any one of us. It's files@tvhgroup.ca, and it'll come to all three of us. So that's even better if you want to reach us there. And also, for those who don't know, we also just made a Facebook for Verico TVH Mortgages Inc. So give us a follow on Facebook too. We're going to start doing some fun little, finance and mortgage topics on there, right? So please give us a follow. We're trying to extend out more into the, internet sphere. So we would love to hear what you guys have to say, and, help you out in any way we can.
So are you going to post this episode on the Facebook page?
1,000% is getting posted. I want my face. Yeah, I want my face on the page. I want.
Alrighty. So Josh, you'll post the YouTube episode. You'll also post the podcast episode because not everybody likes to watch, but they like to listen. And there'll also be a blog post as well. So how about you post all three on the Verico TVH Mortgages Facebook page? So that way people can watch, follow, listen, read, however they prefer to absorb the information, they can do it there. So I'm excited about that. I'm going to hold you to it.
Come
Yes.
to the office face to face too.
Yeah, Ryan,
always
there's
there.
competition because Josh knows our phone number. I know if I ask you, you're going to forget again. So I will save you. 647-727-4668. But I would encourage people to go to tvhgroup.ca. So if you go to that website, you will see all the divisions within TVH Group. So you'll find Verico, TVH Mortgages, you'll find financial, legal, accounting, and TVH Wealth, and cash flow solutions. We can't forget about that. How else can they find us, Ryan?
At tvhfinancial.ca or email us. So at financial@tvh.ca. I always forget it's .ca. tvhgroup.ca. And then follow us on Facebook, Twitter, Instagram, all that. Giving up
TikTok,
my dancing.
LinkedIn, we're all there. Yeah. Awesome. Listen, Josh, we are very grateful that you joined us today. I'm glad you made it through, even though you fought through some illness. So we appreciate that.
Yeah.
And for sure,
Trooper.
I'm biased. I'm going to admit that, but great group of people to work with. They will treat you well. They will treat you with respect, and they will absolutely do what they feel is best for you in your situation. So please reach out to Verico TVH Mortgages for your mortgage needs. So guys, thank you very much. Have yourselves a wonderful evening. And Ryan, I think we're going to have another episode again next week. We'll keep it a surprise because I don't think we quite know exactly, but I think it might be about spending over the Christmas holidays, right?
That's correct, yes.
That's what we're doing? Awesome.
Yeah.
All right, guys. Thanks. And
All right. Thanks so much.
Bye.
Thanks. Bye.
Why is it me? Why am I a guy? I still